You're listening to the Big Cast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glen Sarvati.
Welcome to another edition of the Big Cast. My name is Glen Sarvati on behalf of the Best Innovation Group, where we like to do cool things with financial technology, and we've got a whole bunch of interesting stuff for you this week. Our main interview is with Sean Banks, a partner at TTV Capital, with great insights on the state of the Fintech world in venture capital, as well as the upcoming Fintech South event in Atlanta, August 19th and 20th. Larry Williams, the CEO of the Technology Association of Georgia, is going to be joining us to speak about that as well. The three of us sat down together in a conference room about a week ago to talk about that. So a good conversation with Sean and Larry. Wide-ranging topics we'll be covering. We've also got a quick update from Millen Borker on one of the current events that kind of popped up over the last week. So more on that in just 1 second. You can always find out more about the Best Innovation Group by checking out our website, big-fintech.com. And this is usually about the time that I mention our credit union town hall, the CU town hall, which usually meets once or twice a month on a Wednesday afternoon. And I want to point out this time that you should mark your calendars for a special time, because the August event will be happening on Monday, August 18th, different day and a slightly different time as well, 3:30 p.m. Eastern Time, 12:30 Pacific. And the reason for that is, well, it's always a live event. I want to be clear on that. But this time it's actually be held on site at one of the America's Credit Union conferences. So it'll be a little bit of a different format and an even more active format with a live studio, not even studio, a live conference audience with people also joining remotely. If I've whet your appetite, I hope I have, because we'll have more details on that over the course of the next week or two. Stay tuned, but always check out cutownhall.com. You can hear the prior sessions of the town hall. There's recordings of those, both audio and video. But you'll also be, you can register so you can join us for that session on Monday, August 18th. Always free to join, but you do need to register in advance. So mark that one on your calendar and hope you can join us then. It should be very, very interesting. Another one over the course of the last week, we talk a lot about our bingo card that we set up at the beginning of the year. And I'll post a link if you want to get involved in that, you can track that down. But one of the other items happened that we pointed to. A merger between two of the country's top 50 banks was announced. I believe it was just last Thursday. Two southeastern banks, Synovus and Pinnacle. They're both in the, they both fall between number 40 and 50 in terms of the rankings of the top largest banks in the country. Interestingly to me, when you bring the two together, this kind of says a lot about the concentration at the very top of the table. They still fall outside the top 30. I think even combined, they're going to be like number 31, maybe like just below USAA, if I'm not mistaken. So I think that's kind of an interesting one. Still got more activity. We've talked about credit unions buying banks. We've talked about big credit unions merging. A lot of activity going on in that space as well. Like I say, more news on that to come. And if you want to find out more about the bingo card, just check out our show notes and you'll find something there. The other piece of big news I want to touch on this week, Sam Altman, you may have heard of him, the CEO and founder of OpenAI. He was speaking at a Federal Reserve conference in Washington, D.C., and he warned about an impending fraud crisis in banking, as, in his words, the whole notion of voice print authentication has been, quote unquote, fully defeated by AI. Pretty provocative phrase. And first thing I thought of when I heard that was our friends over at Illuma, who are two-time defending Best of Show winners at Finovate, and their product Illuma Shield has been one of the leading lights as far as voice print and voice authentication. So I was very curious to see what they had to say. And I reached out to Millen Borker, the founder and CEO of Illuma. They were in the process, not surprisingly, about coming up with a response and trying to explain what their position was relative to Sam Altman's claims. And after he did that, they agreed to sit down and talk to us. So on very short notice, let's hear what he had to say. Joining us on very short notice, Millen Borker, the CEO and founder of Illuma. Busy time. You guys just put out a really great announcement in my mind, Millen, regarding the new excitement around voice multi-factor authentication, deepfake detection. Millen, thanks for taking the time, like I say, to kind of walk through this with us real quickly.
Yeah, I appreciate the opportunity. Always good chatting with you, Glenn.
So, I mean, I think you just mentioned too, it must be something to wake up in the morning and see that Sam Altman, about as, high profile of voices you're going to find, comes out with a pretty big proclamation about the field that you're working in, which I guess happened a little bit less than a week ago, right?
Yeah, and like you said, it doesn't happen frequently, especially when it's something I'm so passionate about. And so, we had to very quickly, formalize a, our position on the topic, which, you know, absolutely correctly said by him. There's with the advancements in Gen AI, uh, the highlights were around voice security and banking, but in my opinion, it actually is much more farther reaching than that. The question is, how do you trust any digital media presented to you, right? How do you trust any phone call that comes to your cell phone? What do you watch on the news? Anything that shows up on FaceTime, where we trust what we're seeing on the other end, not just in banking, but any kind of media consumption. Uh, Pretty broad-reaching impact with what's happening, and in my opinion, it's at a point where technology has gotten so good where human capability to distinguish between real and fake is well surpassed. And the only way to stay ahead of this threat is, fight AI with AI.
I mean, and you mentioned, I think we've all seen this coming. I mean, this is not like you're not going to just throw your hands up and say, "Oh, I guess we lost the fight." I mean, it's really just a new chapter with the stakes being raised, right?
Yeah, absolutely. I mean, we've been, the AI threat, is new, and with the attention on AI, it obviously takes, way more attention. But, you know, trade unions, banks have all been dealing with counterfeits and forgery for as long as I've been alive. Fake driver's licenses, counterfeit currency, fake checks. These have been around forever. We never gave up on these, right? Driver's licenses are still used, checks are still accepted, cash is still accepted at branches. We just basically added more security around it, right? Layers. So combination of human intuition paired with technology to detect fake, distinguish them from real, to allow us to continue doing business. And with this new chapter now, what's really new is with the advancements in AI, these kind of attacks can be performed at a alarming scale. And given that human capability to distinguish has completely diminished, the only path options for us really are either let's step back from digital communications, which I don't see a path to doing that. And B, the only other option is invest in technology to fight technology, because that's the only way we'll stay ahead of the game.
I noticed you make a comment in this letter, the open letter that you wrote. I guess that's the best way to refer to it is, security in the AI era will require relentless innovation. And I think, hard to argue with that point. And that's basically the call to action right now.
Yep, absolutely agree completely. I think, there's two components of innovation that, are focused for us at Illuma. It is synthetic detection. So think of it similar to being able to tell the difference between, real and fake driver's license or checks, but we're doing this on voice. Being Training AI to determine the difference between real voices and fake voices, no matter what tools they were generated from. And then, layering back on traditional methods for security, a multi-factor, really looking at how do we layer on additional passive methodologies to make it that much significantly more harder for the bad actors to attack and be successful.
And you've mentioned too that, I mean, multi-factor authentication has always been part of that recipe. I don't think you ever claimed drop everything else, just use our solution. It's just to
Exactly.
put as much as
Exactly.
you can without creating the friction. Obviously, you need some friction, but to me, and you made the point earlier before we started recording that you still fundamentally believe that we're moving toward a passwordless future, right?
I absolutely do. I mean, we've seen in the industry, the need for replacing password was not purely for a convenience or efficiency point of view. The security aspects of traditional knowledge-based authentication are highly questionable. With the number of breaches that have happened, everyone's data is available in the dark web. And if you look at some of the largest breaches out there, not just in banking, but in the MGM Resorts breach that happened 2 years ago. Clorox had a big breach a couple of years ago as well. These all really came through, knowledge-based authentication failing, giving the bad actors access to a, essentially unlimited amount of information to orchestrate ransomware attacks. These weren't defeating, advanced technology. These were traditional methods, and we see that happening day in and day out at credit unions and banks across the country. So, the flaw in that methodology is still significant. I don't think we're going to get away from that. And so the only path forward is really going to be advanced technology to stay ahead of the game.
Well, as I said before, on pretty short notice, I think you put out a real masterclass in a response here in terms of, I guess, I think it qualifies as crisis communications. I mean, I don't think your company's name is never mentioned in Sam Altman's comments, but it basically speaks to the heart of what Illuma is doing. But I think you make great points that it doesn't change the fundamentals. It just changes the stakes in terms of the ongoing relentless innovation.
I agree completely.
So we'll post a link to that. And if people want to find out more, I guess the Illuma website's still the way to go, right?
Yep, absolutely.
Great. Milan Borkart, CEO, founder of Illuma. Thanks so much.
Thanks, Glenn.
So appreciate Milan taking the time to give us his quick update on that one. Interesting stuff. I will post Perplexity AI's original post on that one, which is pretty disturbing. And then I'll post the response that I thought was, as I said, a masterclass in the way that they approached the situation from Milan and Illuma. So you'll find those in the show notes as well. Let's get on to our main event. One of the most knowledgeable people I know in both the fintech and the venture capital space is Sean Banks, who I've known for some time here in the Atlanta fintech community. I sat down with him last week, along with Larry Williams, the CEO of the Technology Association of Georgia. Larry's going to be interviewing Sean on stage at our Fintech South event, an annual gathering for 2 days that happens here in Atlanta. We'll be at the Woodruff Arts Center, where the Symphony Hall will be used on August 19th and 20th. Sean is going to be our Hall of Fame recipient this year for the TAG FinTech Hall of Fame. But we sat down and had a conversation and a very wide-ranging discussion. I think that anybody who is interested in venture capital, investment funding, things like that, is going to find lots of really interesting takeaways here. As well as a little bit of a conversation about their own funds that what they've learned over time in terms of the time that they've invested in a variety of companies, both outside and inside Atlanta. So let's hear what Sean and Larry have to say. I'm here with Sean Banks, the partner at TTV Capital and the recipient of this year's TAG FinTech Hall of Fame Award. And a good friend of mine going way back here in the community. So thanks so much for taking the time, Sean.
Absolutely, Glenn. Thank you very much for having me. And I'm extremely humbled for the opportunity to be recognized and inducted into the Georgia FinTech Hall of Fame at this year's FinTech South event.
And well deserved. And Larry Williams, the CEO of TAG, Technology Association of Georgia, you two will be speaking on stage at the event, FinTech South, August 19th and 20th. Larry, good to have you on again.
Hi, Glen. Hi, Sean. Delighted to be here.
So a couple of things I wanted to cover, but I think the most interesting piece from our audience outside the Georgia marketplace, and then we'll get into FinTech South as well, is TTV Capital. You've raised 6 funds.
Yes.
You've had 8 unicorns.
Yes.
There's been a lot of talk about fintech funding actually slowing down over recent years. You've actually you've closed your 6th fund. And with one exception back in the financial crisis around 2007, 2008, they've each had an increasing fundraise. And every one has been bigger than the one before, as I recall.
That's correct, Glenn. We've been very fortunate to have great backers in terms of our limited partners. We've had strings of success in terms of finding great entrepreneurs to back, and that has created outsized returns for our limited partners and given us the ability to continue to increase those fund sizes. I think we're probably happy with the current fund size at $250 million, and that's likely to be a strategy moving forward with future funds.
I would assume, success begets success, because once that track record shows itself, there's more people who actually want to get into the game, I assume.
Absolutely. One of the hardest things for new folks moving into the venture capital world and potentially raising first and second time funds is overcoming that hurdle of not having a track record. And I can tell you that Gardner and Tom and Mark and myself, as
these are your partners,
my
TTV.
Partners at TTV, we've watched all of those movies and had the opportunity, now that we've got an established brand, a wonderful network of limited partners, a great set of partners across our partnership, that we're able to raise more money in our funds and therefore find bigger and better deals as we move forward.
Now, when we talk about bigger and better deals too, you have an early stage strategy. Can you explain what defines early stage? What level of company at their formation are you primarily focused on?
Absolutely. So we're a Series Seed to Series B investor. And having been a venture capitalist now for pushing 21 years, those words have meant different things over the years. When in 2005 and 2006, a Series A might be a $3 million raise. Nowadays, a Series A might be a $7 or $8 million to $10 million raise. Seed investing is almost what Series A was back 15, 20 years
And there's
ago.
no hard and fast definition.
Absolutely
right?
not. Absolutely not. There's really not a hard and fast definition. What we have found is that you find an entrepreneur who has a wonderful idea into a big market and has shown the ability to be a coachable leader. And then you come up with a plan for perhaps a seed investment of $1, $2, $3 million. And you go out and you execute on that plan and you agree upon what kind of dilution each party is comfortable with. And then we go and try to help build that business. Now, we'll find entrepreneurs who have raised $2 or $3 million and are now generating $2, $3, $4 million in recurring revenue. And then you're talking about raising a little bit larger amount of money, $10, $12 million, the Series A.
Now, when you get involved, do they tend to have revenue, or you tend to get in before that?
So in our latest fund, we took a bifurcated strategy and we actually allocated, call it 7.5% of our fund to seeding very early stage companies. So writing checks that were from $250,000 to $1 million, where we would allow an entrepreneur where we had a lot of conviction about what they were doing, but they really were not ready for a Series A size check, and getting in there and letting them go and try to build their company. And when the time came, we're already on that cap table and we can be helpful in raising and helping them raise the Series A.
Got it.
Yeah. And so we call that an exploratory group of companies. And we want to see some of those matriculate up into larger investment opportunities in the fund itself.
Makes sense.
Yeah.
Makes sense. Now, just to give people perspective, two companies come to my mind right off the bat. Greenlight, which is a good kind of consumer-facing name people probably are familiar with because they have a direct-to-consumer marketing brand that people are aware of.
Right.
FeatureSpace, a company was recently acquired by Visa. Both
Correct.
members of, I forget which funds you've been involved in.
They're actually,
for some time.
both of those are Fund 4 companies.
Okay.
Yeah.
So, I mean, those are two of the success stories. And just by coincidence, I'm pointing out two companies from the Georgia marketplace.
Yeah, absolutely. So we're extremely proud of both of those organizations. In fact, the Georgia ecosystem is what led us to FeatureSpace. FeatureSpace was actually founded in Cambridge, England.
I remember that.
And so our good friends down at TSYS, now part of Global Payments, now part of FIS,
Right.
Called us and said, hey, we think we've found something pretty interesting over in Cambridge. We went over there.
Now, they were an investor, right? They were fund.
Yes, they were one of our anchor limited partners,
Okay.
and Global Payments remains an anchor limited partner. But TSYS absolutely has been a long, long time partner of the fund from an investing perspective and really from a business perspective. And so when FeatureSpace looked to open North American headquarters, it made absolute sense to put them in Atlanta.
I remember
and so,
that.
so David Exel moved over here. Martina King continued to run it as a CEO in Cambridge, and Dave was really the technology guy behind FeatureSpace's solution set. And Dave is now the head of artificial intelligence for Visa.
I was going to say, it just kind of rolls into Visa.
Exactly.
So, Larry, I'm sure you've been seeing this not just in fintech, but more broadly in the technology space. I mean, what do you see? Like stories like FeatureSpace, where someone says, "Hey, this is the place to be." Other examples along those lines that come to your mind?
By all means. So we recently inducted Topa Watana, the founder of Calendly, into the Georgia Technology Hall of Fame. But that's just another one of those unicorns. Somebody who was an engineer who really thought about a problem that he was having and realized everybody else was having that problem too.
Another brand name that I was amazed. I mean,
Yep,
people didn't realize that was sitting in Atlanta at the Tech Village.
Well, it's what I say about fintech in Atlanta. If you're 51%, you're number one. If you're 70%, you dominate. And he dominates that field, and he built up a product, and he's got great ideas for how to expand it. But you think about a lot of the companies that have built up here that have become dominant in their space. And so it's a fascinating place to be and a fascinating time for us to be here. I continue to describe Georgia as where technology meets the real world. And what I mean by that is we don't always have the shiniest new gadget or the coolest new social app.
Or the consumer-facing app.
But we have more people driving revenue with technology than anywhere else. And it's MarTech. And I say, it's not always the sexiest thing unless you think making money sexy. And then we're the sexiest thing around.
And that's a good point. I mean, Calendly is an example of a consumer-facing brand. Greenlight is an example. But for the most part, your portfolio tends to be things that would not be a name that consumers would necessarily encounter. Am I right?
That's true. We have a mix. You'll find consumer-facing brands like a Greenlight, like a Smart Asset. You'll also find things like FeatureSpace that the
average Joe on the street
will have no idea that they're actually touching it and using it.
Or Bill.com.
Bill.com. Cardlytics. Cardlytics is another great example here in Atlanta of
another one of your unicorns.
Another one of our unicorns. Yep. So there is consumer-facing opportunity in fintech, but there's a lot more beyond that too.
One of the things that comes to my mind, obviously, as a venture capitalist, you can't be so parochial to just look at the Georgia market,
right,
the Southeast market. But 3 of your 8 unicorns have been here. What do you think is unique about the Georgia market? How do you see Georgia interacting to the broader ecosystem around the country?
Certainly. We are fortunate enough to have tentacles across the country. And so I would say each one of our partners has a similar take on how different ecosystems work. I'm very comfortable with Salt Lake City. I've got several investments out there, and you can see what drives Salt Lake City. Atlanta and Georgia in general have a very strong payments ecosystem there. So when you think about Greenlight, you're talking about payments for kids. When you talk about Cardlytics, you're talking about monetizing payments data. When you talk about FeatureSpace, you're talking about fighting fraud inside the payments world. So that's something that really differentiates and allows companies in Atlanta in particular to make their name in fintech around payments. But you've also had very good successes with groups like Cabbage and GreenSky, which are fintechs, and frankly, we were not investors in those, and by no means is that the gating factor for a fintech in Georgia to be successful is to have TTV's backing, because those folks have absolutely proved it. But you've got a really strong, savvy workforce here that understands the money movement and understands underwriting. And when you think about fintech, sometimes we forget that we have Equifax sitting up the street, which is a gigantic player that you don't necessarily think of, but they're absolutely in that space. Yep. And so they have an influence on the workforce and what kind of work talent we have here. So it really sets up a very nice breeding ground for all sorts of innovation around financial services.
And people who know how to interact with companies like
Absolutely.
Global Payments, or back in the day, First Data, or CheckFree.
That's exactly
like
right.
That. Now, even before I knew you, before you got into the venture capital space, you were a founder yourself, right?
Well, I was a member of a founding team. Okay. I wasn't the founder per se, but I absolutely have worked in startups where we didn't have funding, we didn't get paid, and everybody did everything in order to try to find that first revenue. So I have a deep, deep-seated respect for the folks who are willing to go out there and put it all on the line to try to build something bigger and better and change trajectories of their own lives and other people's lives by building and creating new sectors.
And I remember hearing you say before, to do these kind of things, you've pretty much got to be prepared to work without a paycheck for a pretty extended period of time.
Well, what you will find is that some of the most successful entrepreneurs go by the mantra that I do not work for the 15th and the 30th. Mm-hmm. I work for that one big payday when I sell this thing and I make a whole boatload of money all at once. And but it's important to think that way, because if you believe that you can start a business, a tech startup, and keep your executive salary that you had working for a Fortune 500, those are absolutely incongruent, because you're going to run through too much money too fast. You're not going to own enough of your company, and you're not going to have that chance to blow it out of the water, because you'll spin too fast before you can get traction.
Makes a ton of sense. That reminds me, Larry, we've got coming up now of the next generation of those green shoots,
Exactly
the
right.
Innovation Challenge coming up.
So Fintech South coming up on August 19th and 20th. And one of the big components of that is something that Sean helped start, and that's our Innovation Challenge. And that is where we get to look at all of these great, smart entrepreneurs, people that have that next bright idea, and how do we build that next generation of ingenuity.
And we got 9 companies.
We got 9 companies that have been vetted. This is the semifinal, so to speak. And so that process starts between now and Fintech South, August 19th and 20th. But then there are a few that get to pitch on stage, but there will be one that will get a big check for $25,000, non-dilutive. And it's very important for an early stage company to have some money that they can invest in and help build their company. And so no strings attached, and we're delighted to be able to sort of invest in them and, give them a boost up and, send them out into the world with, better prepared for success.
And one of the other interesting things about that, and we've done kind of a where are they now kind of follow up with some of those companies. Mm-hmm. The winners have done good. They've done well, but we've got multiple companies who were kind of the finalists that didn't quite make it that have done just as well. So I think the experience and just the connections you make out of that. Sean, I'd kind of forgotten that you'd been part of that, actually setting it up. And one of your partners is actually, I believe, on the judging committee.
Absolutely. I think Lainey Lewis is on the judging committee, and she is an absolutely outstanding venture capitalist. When we went about creating the Innovation Challenge, the carrot was always the non-dilutive capital.
Right.
But I think that the value may have been and may continue to be the 4 or 5 sessions that we have with a larger cohort of companies to get them comfortable with, how do I sell into financial services companies? How do I think about a term sheet and talking to a venture capitalist? What are the legal hurdles that I need to think about if I'm starting a payments company, a lending company, a trading company, whatever that may be? And then the exposure of being on stage at Fintech South, or even before that, when you're on stage presenting to try to get to Fintech South in front of a group of great judges. So that's, the 25,000 is incredibly important. But there's a lot to it, even if you don't get the 25,000 that you'll get out of it.
And I remember an example of one of our winners, Sebastian Viles from Arkham, a couple of years ago. The check was great, but as he was walking off the stage, one of the big players in town here stopped him and said, "I'd like to talk to you a little bit more about your solution."
Yep.
Those are the kind of connections that you've got to make. Coinbase Ventures, another one of the judges, which I think is fascinating. So this is going to be a really great one.
Great.
Larry, you've known Sean for some time as well, and I know you two will be speaking on the stage as a fireside chat as part of the Hall of Fame presentation. What are your reflections in terms of what Sean's brought to the ecosystem over time here in Georgia?
I'm thinking we're going to have a beer.
I think we're going to have to.
I think we have to.
There's no doubt about it.
Some of our most creative thinking.
Right. I mean, that's where most of this came from. Was the pub.
So, listen. Sean is the fabric of our fintech community. I mean, he has been woven through every part of it. He's an investor, he's a mentor, he's a builder, he's everything. But he's a voice around the world about why fintech is so important to Georgia, and not because we brag. It's because we've earned our spurs. We've earned our seat at that table because we've helped to build every layer. So you often refer back to check processing and things like that. We helped digitize the whole industry, and it was built here. So the knowledge base is here because we helped build every layer of the onion. That's Sean. Sean's been a part of that throughout his career, and what he's really done so well is bring together that community. When he took over the FinTech Society at TAG, he took it to a new level.
Agreed.
And, not only thinking of creative ways to help build the ecosystem through the Innovation Challenge, through the Advance Awards, through other things. The Advance Awards, also an important part that celebrates the mature companies with great creative ideas. And there's certainly synergies with our Innovation Challenge companies. These things are extremely important, and then getting people around the table to actually share ideas, think about things that we can do.
One final thought, Sean. I
Yeah.
mean, given we've got young entrepreneurs out there, people looking to kind of make their mark in founding, and the market has been a little bit tougher than it had been. I think maybe people got a little bit spoiled at the height of the market in terms of how easy it was to raise. Any words of wisdom about how to persevere in today's marketplace?
Well, I think you've got to recognize that we go in pendulum cycles, and we went into a pendulum cycle in 2021 and 2022 where valuations got extremely overheated, and there were lots. And we talked about our early stage strategy. A lot of that was an offshoot of the fact that companies would come to market and get kind of priced out of the Series C and Series A world before you had a chance, because you'd have a lot of these kind of investors in the space that were more tourists than residents.
Mm-hmm.
And so they would chase deals and make it very, very expensive. And then you went the other way, though. And it dried up, and valuations came way, way back to where it was an extremely attractive for investors. But what ended up happening in situations like that were the savvy entrepreneurs and the savvy venture capitalists who had folks that had raised in a high environment said, batten down the hatches, keep cash on your balance sheet, and don't have to go to market until you have to go to market. Don't try to go and blow it out of the water now by raising a big round, because you're just going to dilute all of us around the table. So the early stage folks are coming back out. We're seeing groups that may have raised capital back in 2021, 22 coming back to market, but they've grown into their valuations, right? And so the valuations aren't necessarily going down, which they were for 18 to 24 months. They may be flat to up for some of those, but it's also, now that those folks are starting to be able to raise capital again, it's getting more money back into the earlier stage, because PE is very much a cyclical animal. And if the top gets constipated, the whole rest of the system gets constipated. And now that we're starting to see IPOs come back, we're starting to see more corporate M&A, we're starting to see valuations that are reflective of strategic multiples versus financial multiples, that gets the entire system moving again and will free up more capital. So for those entrepreneurs who may be coming to market now, figure out the smallest amount of money you need to raise in order to get to that next milestone, and keep hitting milestones. Venture capitalists watch to see that you make progress, and the progress may not necessarily be revenue driven. Revenue is very important. It could be tech driven. It could be team building driven. It could be contracts being signed with larger partners. Those are the things that we can look at and back. And being judicious about how much money you raise early will put you in a position that you're not handicapped by having raised too much too fast and not been able to grow into it because you weren't ready for it.
That makes a ton of sense. And wow, that's a keeper. I like that one.
I added that one in post.
and the only one of the things I heard, kind of the key takeaway there, is it's a cyclical business, and it sounds like the worst part of the current cycle is probably behind us.
I tend to think so, yes. I think there's a little bit more surety coming out of Washington, a little bit more, because we know where tax rates are going to be. We know where QSBS is going to be. That's a very attractive thing for entrepreneurs and investors. We know that the R&D tax credits are now looking retrospectively, so that's more money that entrepreneurs can go out and find. But one other note to share: I have a very good friend who lives in metropolitan Atlanta, and I won't mention his name, but we were roommates at the Naval Academy together, and he and his wife.
That narrows it down.
Yeah, I know. I lived with a lot of people. It's a big building, Larry. I'm not going to lie, 4,200 of us. But he and his wife created an unbelievably great business. And he and I were at a reunion, and we were driving to the airport, and he said, "I've got all these folks trying to give me all of this money, and I don't need it, but they're pricing it so heavily that they're gonna take a third of my company." And I said, "Well, how much money do you actually need?" And he gave me a number, and it was not a crazy number. It might have been $250,000, $500,000, something along those lines. I said, there's no shame in not taking venture capital, or there's no shame in not taking private equity. Look at your own personal balance sheet and see if there's money that you just don't realize you can tap. And in their case, there were life insurance policies that they were able to find. And he says it was some of the best advice he ever took was the venture capitalist telling him, you don't have to take venture capital to make a great business. So,
wow, that's coming from a venture capitalist. I'd say that goes a long way. Yep. Sean Banks.
Thank you, Glenn. Thank you,
TTB
Larry.
Capital, Larry Williams.
Thank you, Glenn. Thank you, Sean. Congratulations again.
Fintech South, August 19th and 20th. See you both there.
Sounds great.
So thanks again to Larry and Sean for taking the time. If anybody is interested in making the journey, it's hopefully maybe the heat will die down a little bit by the end of August. August 19th and 20th here in Atlanta. If you're interested in joining us, I'd love to see you. I will be there for the whole stretch. And if you do come, please do say hi. But if you are interested, you head over to fintechsouth.com. At the registration page, as a BigCast listener, we can offer you a discount if you enter in the discount code BigCast25. I think Big and the capital and C are capitalized, so capital BIGC and then lowercase ACT 25 should do the trick. If you have any problem with that, drop me an email. We'll figure that one out. With that, another week and another episode of the Big Cast in the books. I'm sure we're going to have even more headlines for you by next week. There's all kinds of fun stuff going on, and it doesn't seem to be showing any sign of stopping. You can find out more about my firm, 154 Advisors, by checking me out on Bluesky or on LinkedIn. You can find out more about the Best Innovation Group by checking out big-fintech.com or on LinkedIn. You can also find John Best, our Grand Poobah, at JB Fintech. You can always find our past episodes. If you want to go to the website and go to the media tab, you'll find some interesting stuff there. I also wrote a blog recently about the Q2 results on the whole real-time and same-day payment space and some interesting trends and developments that we've been seeing in that area. So I encourage you to take a look at that one, also available on the website. We have new content pretty much every Tuesday. We will next week. Got another interesting interview lined up for you already on that as well. And just check back, or if you haven't already, like, subscribe, whatever you do at the podcast platform of your choice, and you'll be alerted when we have new content out there. Again, my name is Glen Servati. The company is the Best Innovation Group. We're the Big Cast, and thanks as always for listening.
Check back each week for the latest from the Big Cast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at Big Fintech, email info@big-fintech.com, or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.